Greetings and welcome back to the Global Business Channel. It's once again a pleasure to have you with us as we are continuing with part 2 of our 5-part series on the global business sector in Mauritius, regulated by the Financial Services Commission of Mauritius, or the FSC, with a deep dive into global business corporations, or GBCs, which are at the very heart of Mauritius's international financial services and global business sectors. Understanding GBCs is critical for investors, management companies, compliance officers, and financial professionals, as these entities shape the regulatory and operational landscape of global business in Mauritius. Today we'll be exploring the meaning, scope, and statutory provisions that apply to GBCs under the Financial Services Act 2007 or the FSA 2007, and highlight their compliance obligations, governance rules, and special treatment under Mauritian law. To make this easier to follow, I'll be providing structured visuals and breakdown slides throughout the video so you can clearly see the statutory sections, obligations, and classifications as we go along. Here's what we'll cover in this video. Number 1, what is the meaning of a GBC under Section 2 of the FSA 2007? We begin with the legal definition of a global business corporation and how it is distinguished from other resident corporations. Number 2, Part 10, Global Business Coverage of the Financial Services Act. We'll go through an overview of how the FSA 2007 dedicates Part 10 to global business and why it is a central pillar of regulation for international financial activities coming out of Mauritius. Number 3, Section 71, Global Business Corporations. We will revisit Section 71, this time in full detail, covering the licensing requirements, control tests, management and control criteria, and tax residency obligations of GBCs. Number 4, Section 73, Conduct of Global Business. We shall be exploring the obligations and restrictions on GBCs when carrying out global business, including what business dealings and transactions are permitted in Mauritius and or with residents of Mauritius. Number 5, Section 73A, Directions by the FSC. We will also be understanding the powers of the FSC to issue binding directions to GBCs and ensure compliance with statutory and regulatory obligations. Number 6, Section 74, Validity of GBLs for GBCs. This part will highlight how long a global business license remains valid and the conditions under which it may be suspended or revoked. Number 7, Section 75, FSC Power of Inquiry. We will also take a look at the FSC's authority to conduct inquiries into the business and affairs of GBCs and the implications for governance and compliance. Number 8, Section 79, Special Provisions for Global Business Corporations. This will be summarizing the special treatment afforded to GBCs, including tax residency, treaty access, and compliance obligations. And number 9, Conclusion and Key Takeaways. Finally, we'll be wrapping up with core lessons, compliance reminders, and why understanding the GBC framework is essential for global investors and professionals in Mauritius. Just so you know where we're heading and continuing in this series, Part 1, Global Business Licenses, was the subject of our previous video. If you haven't watched it yet, we highly recommend and suggest you do, elsewise this video might not make complete sense to you and create confusion as GBL requirements are directly tied into GBCs. Part 2, Global Business Corporations and their statutory requirements, today's video. Part number 3, Substance Requirements, including tax residency, tax rates, and the use of double taxation avoidance agreements, otherwise known as DTAAs. Part 4, Shareholding and Structuring of GBCs, with practical structuring examples. Finally, Part 5, the full GBL application process, covering both registration with the Mauritius Registrar of Companies, if incorporated as a company or foundation, and the subsequent licensing application with the FSC. Before we carry on, I must make one of many disclaimers throughout this video. Please note that this video is for information and educational purposes only and should not be considered legal, tax, financial, or investment advice. Always seek professional and/or guidance before taking any compliance or licensing steps, be it through management companies, lawyers, tax, or investment advisors that are professionally qualified and who are to be properly licensed and authorized to do that. To begin, let's first understand what a global business corporation actually is under Mauritian law, specifically through the Financial Services Act 2007. Section 2 of the FSA 2007 about interpretations defines global business corporations. In simple terms, a GBC is any corporation that holds a global business license issued under Sections 71 and 72 of the Act. This license is what gives the corporation the legal status of a GBC, distinguishing it from other types of resident corporations in Mauritius. Section 2, Interpretations, also defines corporations. The Act also clarifies what is meant by the word corporation. A corporation is generally a body corporate, such as a company incorporated under the Companies Act, but it does not stop there. Depending on what is specified in the FSC rules, the term can also extend to include trusts, societés, partnerships, or any other body of persons established under Mauritian law or approved by the competent authorities. Let's look at a key distinction. While many entities may qualify as a corporation, only those that successfully apply for and hold a global business license become global business corporations. In other words, a GBC is not a separate type of company by incorporation. It is a status granted through licensing by the Financial Services Commission of Mauritius. A global business license, as we saw in our previous video and as we just observed now, means a license issued under Section 72(6) of the Act, if approved by the FSC, which authorizes a corporation to conduct business primarily outside of Mauritius, but through a legal entity, in this case a global business corporation that is incorporated or registered in Mauritius. For ease of reference and understanding, let's do a quick visual recap of global business corporations. As we saw in our previous video, a GBL allows a corporation with foreign ownership, meaning foreign ultimate beneficial interest, in other words, non-citizens of Mauritius, to use Mauritius as a base for international business operations, while still being fully recognized and regulated under Mauritian law, especially through and by the FSC. In simple terms, a GBC is any corporation that holds a global business license issued under the conditions of Section 71 and 72 of the Act. The license is what gives a corporation the legal status of a GBC, distinguishing it from other types of resident corporations in Mauritius. A corporation is generally a body corporate, such as a company incorporated under the Companies Act, but the definition is broader. Under FSC rules, a corporation can also include trusts, societés, partnerships, foundations, or any other body of persons established under Mauritian law and as permitted and allowed by the FSC. The key distinction: many entities may qualify as corporation, but only those that successfully apply for and hold a global business license become global business corporations. In other words, a GBC is not a new type of company or entity structure. It is a status granted by the Financial Services Commission of Mauritius through licensing. Now that we've defined what a global business corporation is, let's turn to Part 10 of the Financial Services Act 2007, which deals specifically with global business. Here's the question: why does Part 10 matter in the sector's context? The FSA 2007 is a wide-ranging piece of legislation that regulates all non-banking financial services in Mauritius, as we saw from our previous video. Within this framework, Part 10 is dedicated entirely to global business, be it whether the corporation engages in financial services or non-financial services. This means that all legal foundations, regulatory expectations, and operational rules for global business corporations are contained in this part of the Act. Let's look at the scope of regulatory coverage. Part 10 lays down the following. Number 1, the legal status of GBCs, confirming their recognition as a special category of corporations in Mauritius. Number 2, the conditions under which they operate, including their licensing, compliance, and governance obligations. Number 3, interaction with the FSC as the regulator responsible for overseeing their activities. Now, why is this important? By creating a separate section in the Act, lawmakers make it clear that global business is not just a side activity. It's a distinct and regulated sector within Mauritius's financial services industry. For investors, service providers, and professionals, Part 10 provides certainty and transparency about how GBCs are expected to operate. The key takeaways: think of Part 10 as the rulebook for global business and global business corporations in Mauritius. Every provision we'll discuss in this video from Section 71 through Section 79 falls under Part 10, ensuring that global business corporations are clearly defined, properly regulated, and transparently supervised. Let's now look at the core provisions for the global business sector in Mauritius. Section 71 of the Financial Services Act 2007 establishes the legal framework for global business corporations. It tells the wider public who qualifies, how the license works, and the obligations GBCs must comply with. Section 71(1) Who must apply for a global business license? The law says that subject to Section 71A, meaning the section for authorized companies, which are a separate and different type of offshore entity, where the majority of shares, voting rights, or beneficial interest in a resident corporation other than a bank licensed by the Bank of Mauritius or any other type of corporation specified in FSC rules are held or controlled by a person who is not a citizen of Mauritius, and that corporation proposes to conduct or conducts business principally outside of Mauritius or with categories of persons specified in FSC rules, then it must apply to the FSC for a global business license. This is the foundation of the GBL framework. Let's do a visual recap of subsection 1. Any resident corporation can apply for a global business license if, and the big word here is if, the majority of shares, voting rights, or beneficial interests are held by non-citizens of Mauritius, meaning foreigners, and it conducts or proposes to conduct business mainly outside Mauritius or with persons specified in FSC rules. The key point here, the GBL is primarily issued for international business activities, meaning outside of Mauritius, with the GBC being held and owned in a foreign, meaning non-Mauritian capacity. Section 71(2) Additional licenses required. If that same applicant intends to conduct any business for which another license, authorization, registration, or approval is required under any relevant act, it must apply for that as well before commencing business. For example, if a GBC holder of a GBL wants to conduct financial services activities, as we covered in our previous video, it must apply for an additional/relevant financial services license as per the FSC's codified list. Now here again, a visual recap of subsection 2. If a GBC wants to carry out an activity that requires another license under any law, in this case under a relevant act, or as per the second schedule of the FSA 2007, or as specified in particular sections of the FSA 2007, which again we covered in our previous video, it must first obtain that license before starting the activity. Subsection 3A regarding ongoing requirements relating to core income generating activities and control. Under subsection 3A, a corporation holding a global business license must continuously demonstrate that it satisfies key substance and control requirements as prescribed by Mauritian law. These obligations ensure that the GBC operates as genuinely as a resident entity in Mauritius and not merely as a shell or conduit structure. Accordingly, a GBC is required at all times to, number 1, carry out its core income generating activities, otherwise known as SIGA, in or from Mauritius. This requirement, set out under the Income Tax Act of 1995, ensures that the corporation's principal activities, those that generate its primary source of income, are conducted locally. It reinforces Mauritius's tax residency and economic substance framework, confirming that genuine business operations occur within the jurisdiction. We will explore this in greater detail in part 3 of the series. Number 2, be managed and controlled from Mauritius. This means that the company's strategic decisions, including board meetings and policy approvals, must take place in Mauritius, and key corporate records should be maintained locally to evidence that control and direction are in fact exercised from within the country. And number 3, be administered by a licensed management company, which must also act as the company secretary. The management company serves as the primary liaison with the Financial Services Commission and ensures that the GBC remains compliant with all statutory, regulatory, and filing obligations. Its dual role as administrator and secretary ensures sound corporate governance, proper record keeping, and adherence to all reporting and licensing requirements. Once again, a visual recap of subsection 3A. A corporation that holds a global business license, in this instance a GBC, must at all times, number 1, carry out its core income generating activities in or from Mauritius as required under the Income Tax Act. Essentially, this is required to meet substance and tax residency. Number 2, be managed and controlled from Mauritius. And 3, be administered by a licensed management company that must also serve as the corporation secretary. Subsection 3AA, appointment of a new management company. If a GBC changes its management company, its application to the FSC must be accompanied by the prescribed fees as set out in the FSC rules. No visual recaps here, as this is straightforward. Subsection 71(3)(b), what managed and controlled from Mauritius means. To determine whether a GBL holder is truly managed and controlled from Mauritius, the FSC will look at several factors, including whether the corporation has at least 2 resident directors in Mauritius of sufficient caliber to exercise independence of mind and judgment. Now, what does resident director mean? Under the Income Tax Act of 1995, Sections 2 and 73, a resident individual is one who, for a given income year, has their domicile in Mauritius unless their permanent place of abode, meaning the residence where the said individual lives or stayed regularly, is outside of Mauritius, has been present in Mauritius for at least 183 days in that year, or in the alternate, has been present in Mauritius for at least 270 days across that year and the 2 preceding years. Maintains its principal bank account in Mauritius. For clarification purposes, this means a bank operating in Mauritius and licensed and regulated by the Bank of Mauritius. You should refer to the BOM Register of Licensees for confirmation on this. However, to note, the GBC may open foreign bank accounts, but the majority of transactions in relation to the business affairs must transit through the principal bank accounts in Mauritius and not from those international bank accounts the GBC may have opened. For added control, whilst not inscribed in the law, it is advised that the management company and or resident directors be signatories on the bank account, if not singly, at least jointly, again reinforcing the control and management from Mauritius test. Keeps and maintains its accounting records at its registered office in Mauritius. Prepares and audits its statutory financial statements in Mauritius. For clarification purposes, this means having the financial statements audited from an auditor permitted to do so in Mauritius. And finally, holds board meetings with at least 2 Mauritian resident directors, one of which must chair said meetings. These requirements make sure that GBCs have genuine substance in Mauritius rather than just a brass plate presence. Now, here again, a visual recap of subsection 3B. To ensure a global business corporation is genuinely managed and controlled from Mauritius, the FSC assesses whether it has at least 2 Mauritian resident directors, individuals who live permanently in Mauritius and meet residency tests under the Income Tax Act, residing in Mauritius or presence of 183 days in a year or 270 days over 3 years, maintains its principal bank account in Mauritius with a locally licensed bank under the Bank of Mauritius. Most transactions must flow through the account, not through the foreign ones. Keeps accounting records at its registered office in Mauritius. Prepares and audits financial statements in Mauritius using an auditor licensed to operate locally, and holds board meetings in Mauritius chaired by at least one Mauritian resident director. Together, these measures ensure that GBCs demonstrate real economic substance and control within Mauritius, not merely a nominal or quote-unquote brass plate presence. Subsection 3C, Statutory Filings and Change of Directors. A GBC must notify the FSC within 7 days of any statutory filings with any registrars or registries or relevant document relating to the change in directors. No visual recaps here, as this is straightforward. Subsection 4, Consequences of Non-Compliance. If a GBC fails to comply with FSC rules or guidelines, the FSC has the power to, number 1, direct the GBC to cease part or all of its business, or require the GBC to take remedial action as determined by the FSC. Once again, no visual recaps here, as this is straightforward. Subsection 5, Unlicensed business is an offense. If a corporation carries on global business activities without holding a valid global business license, it commits an offense under the Act and is liable upon conviction to a fine of up to 1 million Mauritian rupees. Once again, no visuals will be outlaid. However, please do take a few seconds to fully absorb and appreciate this subsection. Subsection 6, Resident Corporation defined. A resident corporation can be a company incorporated or registered under the Companies Act, a société or partnership registered in Mauritius, or a trust, or any other body of persons established under Mauritian law. Just as resident individuals, the term resident refers to sections 2 and 73 of the Income Tax Act 1995, meaning resident in Mauritius for tax purposes. So the key takeaways from this: Section 71 does not just define who can become a GBC. It sets out strict ongoing obligations, reporting duties, and even penalties for non-compliance. A GBL held by a global business corporation is not simply a license. It's a regulated status that requires continuous oversight by the FSC. And as usual, with that in mind, let's do a full visual recap of all provisions of Section 71 on global business corporations. Section 71 of the Financial Services Act 2007 sets the framework for global business corporations, defining who qualifies, how licenses are issued, and what obligations apply. Section 71(1), who must apply for a global business license. A resident corporation must apply for a GBL if most of its shares, voting rights, or beneficial interests are held by non-citizens of Mauritius, and it conducts or intends to conduct business mainly outside Mauritius or with persons specified in FSC rules. The key point here: the GBL is designed for international activities owned or controlled by foreign investors. Section 71(2), additional licenses required. If the GBC also wishes to carry out an activity that needs another license under any relevant act, it must apply for that license before starting operations. For example, a GBC providing financial services must also hold a specific FSC Financial Services license. Section 71(3)(a), ongoing requirements, core income generating activities and control. A GBC must always carry out its core income generating activities in or from Mauritius to meet substance and tax residency tests. Be managed and controlled from Mauritius, meaning strategic decisions, board meetings, and records kept locally. Be administered by a licensed management company, which also acts as the company secretary. Section 71(3)AA, appointment of a new management company. When changing management companies, the GBC must apply to the FSC with the prescribed fees. Section 71(3)B, what managed and controlled from Mauritius means. The FSC checks whether the GBC has at least 2 Mauritian resident directors as defined under the Income Tax Act, 183 days in a year or 270 days over 3 years. Maintains its bank account in Mauritius with a locally licensed bank through which most transactions must pass. Keeps its accounting records at its registered office in Mauritius. Prepares and audits financial statements in Mauritius by a locally approved auditor. Holds board meetings in Mauritius chaired by a Mauritian resident director. These measures ensure real substance and control, not just a brass plate presence. Section 71(3)C, statutory filings and director changes. A GBC must notify the FSC within 7 days of any statutory filing or change of directors. Section 71(4), non-compliance. If a GBC fails to follow FSC rules or guidelines, the FSC may direct it to cease business or require remedial actions. Section 71(5), operating without a license. Carrying out global business activities without a valid GBL is an offense punishable by a fine of up to 1 million Mauritian rupees. Section 71(6), definition of resident corporation. A resident corporation includes a company incorporated under the Companies Act, a societe or partnership registered in Mauritius, a trust or other entity formed under Mauritian law, as may be approved by the FSC. Now, the term resident follows Sections 2 and 73 of the Income Tax Act 1995, meaning resident for tax purposes in Mauritius. Overall, the key takeaway, Section 71 doesn't just define who qualifies for a GBL to be a GBC, it sets continuous substance, control, and reporting duties backed by FSC oversight and penalties. A global business license is not just permission, it's a regulated status demanding ongoing compliance. As you can see, we are moving from Section 71 to 73, while skipping Section 72, application for global business license, as this will be covered in the final part of the 5-part series. Section 73 of the Financial Services Act 2007 establishes how a global business corporation may operate as per its title, Conduct of Global Business, specifically what kinds of dealings or transactions are permissible in Mauritius without losing its quote-unquote global nature. Let's break this down subsection by subsection for clarity. Section 73(1), Core Principle. A resident corporation that holds a global business license, meaning a global business corporation, is considered to be conducting business outside Mauritius, even if it carries out certain specific dealings within Mauritius. In other words, these allowed dealings do not change the corporation's global character. Permitted dealings and transactions with residents of Mauritius. Each item under Section 73(1)A through G outlines what a GBC may legally do within Mauritius while still being recognized as a corporation carrying on global business. Section 73(1)A, opening and maintaining bank accounts in Mauritian currency. A GBC can open and maintain a bank account in Mauritian rupees with a licensed bank for day-to-day operational expenses, for example, paying local service providers, salaries, or administrative costs. The purpose? This ensures a GBC can function effectively in Mauritius without being viewed as conducting local trade. Section 73(1)B, holding or leasing immovable property in Mauritius. A GBC may lease, acquire, hold, or dispose of immovable property in Mauritius, but this is subject to the Non-Citizens Property Restrictions Act. A practical example, leasing an office or premises to conduct administrative functions, not for real estate investment or resale. Section 73(1)C, investing in listed securities. A GBC may invest in securities listed on a licensed securities exchange in Mauritius, for instance, the Stock Exchange of Mauritius. The purpose? To encourage capital market participation without breaching local business restrictions. Section 73(1)(d), Foreign Currency Accounts. A GBC can also open and maintain bank accounts in foreign currencies, for example, United States dollars, GBP, British pound sterling, or euros for its international operations. The important? It supports cross-border trade, investments, and foreign exchange transactions. Section 73(1)(e), Dealings with other global business corporations. A GBC can hold shares, debentures, or securities in or transact with another corporation holding a global business license. A popular example is a GBC being the shareholder of another GBC. The effect? This allows GBCs to invest in or collaborate with each other, forming part of Mauritius's wider global business ecosystem. Section 73(1)(f), Professional relationships with licensed service providers. A GBC can enter into business relationships with management companies, law practitioners or legal consultants, law firms, and qualified auditors in Mauritius. The purpose? This enables a GBC to be legally and operationally managed from Mauritius while ensuring compliance and governance standards are maintained under the oversight of the FSC. Section 73(1)(g), Employing staff resident in Mauritius. A GBC may employ Mauritian residents, including directors, compliance officers, accountants, or administrative personnel. The purpose? This supports local economic substance requirements and aligns with the FSC's focus on operational presence in Mauritius. Section 73(2) and 3, repealed by Act No. 11 of 2018. These subsections were removed during legislative updates to modernize the global business framework. A note for compliance officers and professionals: always ensure references to repealed sections are excluded from operational manuals or licensing documentation. Section 73(4), Global Headquarters and Treasury Activities. The FSC may issue rules governing how global headquarters, administration, and global treasury activities can be conducted from within Mauritius. The purpose? To attract multinational operations to base their regional or global headquarters in Mauritius, and to formalize the management of global cash flows and treasury functions under regulated conditions. An example, a multinational may operate its group's financial coordination center in Mauritius, of course subject to FSC rules and approval. Now, for this section, let's proceed with our usual visual recap. The main principle of Section 73, Conduct of Global Business. A global business corporation is considered to be conducting business outside Mauritius, even when performing certain permitted dealings within Mauritius. Subsection A, Local bank account in Mauritius. May open and maintain a bank account in Mauritian rupees, this used for day-to-day local operational expenses. Subsection B, Immovable property. May lease, hold, acquire, or dispose of property in Mauritius, but must comply with the Non-Citizens Property Restrictions Act. C, Listed investments. May invest in securities listed on a licensed securities exchange in Mauritius, for example, the SEM. D, Foreign currency accounts. May hold bank accounts in foreign currencies for global transactions. E, Dealings with other GBCs. May hold shares, debentures, or securities in other global business corporations. F, Professional relationships. May work with licensed management companies, law practitioners, legal consultants, and auditors in Mauritius. G, Employing Mauritian staff. May employ residents of Mauritius. This strengthens local substance and management presence. Number 4, Global headquarters and treasury activities. The FSC may issue rules for conducting global headquarters, administration, and global treasury activities from Mauritius. Still global, GBCs remain international entities even with certain local activities. FSC oversight All activities remain subject to FSC rules and approval. Substance: presence in Mauritius, directors, staff, officers, supports, tax and compliance standards. Restrictions: GBCs cannot conduct local commerce within the Mauritian public. And modern framework: Section 73 aligns with international standards for substance-based offshore structures. Let's move on to Section 73A of the FSA 2007, which empowers the Chief Executive of the Financial Services Commission to issue binding written directions to global business corporations when certain risks or violations are identified. This section reinforces Mauritius's reputation as a trusted international financial center and ensures that GBCs uphold compliance and integrity at all times. Subsection 1. When can directions be issued? The Chief Executive may issue a written direction to a GBC or GBL holder if there are reasonable grounds to believe that that GBC A has contravened or is likely to contravene any provision of a relevant act, such as the FSA 2007, the Securities Act, or AML and CFT frameworks in Mauritius. B is conducting its affairs improperly, for instance through poor governance, lack of due diligence, or unethical practices. Or C is involved in a financial crime such as money laundering or terrorist financing. The purpose: such powers are used to protect the good repute of Mauritius as a clean and well-regulated financial jurisdiction. Subsection 2. Time frame for compliance. Any direction issued by the FSC can specify when or for how long the GBC must comply. This means the FSC can set a deadline or compliance period depending on the seriousness and urgency of the matter. Subsection 3. Binding nature of directions. A GBC must comply with any direction given, regardless of what its constitution or any private contract might say. In other words, statutory directions override internal or contractual provisions. Non-compliance is not an option. Subsection 4. Right to representation. Before issuing a direction, the Chief Executive of the FSC must give the GBC a reasonable opportunity to make written representations. This ensures fairness and natural justice. The GBC can explain its position, provide context, or propose corrective actions. Subsection 5. Immediate directions in urgent cases. However, if waiting for representations could cause serious harm, for example, damage to Mauritius's reputation, risk to the public or the financial system, the Chief Executive may issue an immediate direction that takes effect right away. In such cases, the GBC still gets a chance to respond, but within 7 days from the date of the issuance. Subsection 6. Mandatory compliance. Any GBC that receives a direction must comply with it in full and within the prescribed time frame. Failure to do so constitutes an offense under the Act. Subsection 7. Revocation of directions. The Chief Executive has the authority to revoke a direction at any time by giving written notice to the GBC. This allows flexibility once compliance is achieved or the risk no longer exists. The direction can be lifted. Subsection 8. No hindrance allowed. It is strictly prohibited for any person, including officers, service providers, or third parties, to hinder or prevent a GBC from complying with an FSC direction. And subsection 9. Offense and penalties. Any person who either fails to comply with a direction, as per subsection 6, or knowingly obstructs compliance, such as subsection 8, commits an offense under the Act. Such breaches may result in fines, sanctions, or enforcement action by the FSC. As usual, let's put all of what we just discussed in Section 73A through a visual recap. So, Section 73A grants the FSC specific powers to issue directions to GBCs. This provision is critical because it gives the regulator an enforcement mechanism to maintain Mauritius's integrity and reputation as a trusted international financial center. Section 73A1. When directions may be issued. The Chief Executive of the FSC may issue a written direction to a global business corporation if there are reasonable grounds to believe that the company A has contravened or is likely to contravene any relevant act, is conducting its affairs improperly, or is involved in a financial crime. Section 73A2, Timeline for Compliance. Any such direction may include a specific deadline or a compliance period which the GBC must act. This ensures that regulatory directions are time-bound and enforceable rather than open-ended. Section 73A3, Binding Effect. A GBC must comply with the FSC's direction even if it conflicts with the company's or the corporation's constitution, internal contracts, or existing arrangements. This subsection gives the FSC's authority legal supremacy over internal governance documents, ensuring compliance cannot be avoided through contractual technicalities. 73A4, Right to Representation. Before issuing a direction, the chief executive must give the corporation a fair opportunity to make written representations, that is, to explain its side or provide context. This embeds due process and natural justice into the regulatory framework. 73A5, Urgent or Immediate Directions. However, there's an important exception. If the chief executive believes that any delay could cause serious harm to the reputation of Mauritius, the public interest, or the financial services sector, then the FSC may issue a direction with immediate effect. In such urgent cases, the corporation is allowed to make representations afterward, but within 7 days of the direction being issued. This gives the FSC flexibility to act fast in emergencies while still maintaining fairness afterward. 73A6, Mandatory Compliance. Once a direction has been issued, the GBC must comply. This subsection reinforces the non-negotiable nature of the instruction. 73A7, Revocation of a Direction. The chief executive may later revoke the direction if, for example, the issue has been resolved or if the situation no longer warrants it. This is done in writing to maintain a clear and transparent audit trail. 73A8, Obstruction of Compliance. No person within the corporation or externally may knowingly hinder or prevent compliance with a regulatory direction. This ensures that management, staff, or third parties cannot obstruct or delay implementation. Section 73A9, Offenses and Penalties. Finally, any person who fails to comply with a direction or obstructs compliance commits an offense. This provision makes clear that non-compliance has legal consequences, reinforcing the seriousness of FSC directives. Now, the key takeaway, Section 73A shows that regulatory oversight is not optional. It is continuous, enforceable, and aimed at protecting both Mauritius's international standing and the investor confidence. In essence, this section empowers the FSC to act swiftly and decisively when there's risk to integrity, compliance, or the global reputation of Mauritius. Section 74 of the Financial Services Act 2007 explains how long a global business license remains valid, the conditions under which it may lapse, be reinstated, suspended, or revoked, and what happens afterward. This section is central to maintaining compliance continuity and upholding Mauritius's global financial reputation. Subsection 1, Annual License Fee. Every corporation holding a global business license under Section 72(6) must pay an annual license fee to the FSC. The specific amount and due date are set out in the FSC rules, which can be accessed on the website of the FSC. For context, such fees are valid starting as from 01 July of a given year, extending 365 days, meaning up to 30 June of the ensuing year. Lastly, all fees applicable to global business licenses, inclusive of any relevant license fees payable to the FSC, are outlined in the FSC's codified list. Timely payment ensures that the GBL remains valid and active. Subsection 2, Lapse of License. If the annual license fee is not paid within the time prescribed, the license automatically lapses. Once lapsed, the corporation no longer has legal authority to operate as a GBC until the issue is resolved. Information on lapse of fees is once again available on the FSC rules guidelines. Subsection 3, restriction during lapse or suspension. Where a GBL has lapsed or been suspended, the GBC cannot transact business except with prior approval from the FSC. This ensures that only compliant corporations continue to operate within Mauritius's global business environment. Subsection 4, reinstatement of a lapsed license. A GBC whose license has lapsed may apply for reinstatement within a period specified under the FSC rules, subject to payment of the prescribed fee and reinstatement charge and compliance with any terms or conditions imposed by the FSC. If the FSC approves, the license may be reinstated retroactively as though it had never lapsed. Subsection 5, revocation of license. The FSC may revoke a GBL where it is satisfied on reasonable grounds that doing so is necessary to protect the good repute of Mauritius as a financial center, preserve the integrity of the financial services industry, or protect the public interest. Revocation is therefore a protective and corrective regulatory tool, not necessarily a punitive one. Subsection 6, process before revocation. Before revoking a GBL, the FSC must follow due process by A. possibly suspending the license first, B. providing the GBC with written notice of the intention to revoke along with the reasons, and C. giving the GBC a fair opportunity to make written representations. This upholds procedural fairness and transparency in regulatory enforcement. Subsection 7, after revocation. Once a GBL is revoked, the FSC takes immediate follow-up steps, such as the chief executive must publish the revocation notice in the Government Gazette of Mauritius, and B. may issue directions to ensure an orderly winding up or dissolution of the GBC, including the settlement of liabilities. This ensures an orderly and compliant exit from the Mauritian jurisdiction. Now, the key takeaways: annual fees equals license validity. Paying the annual GBL fee on time is mandatory for maintaining active status. Automatic lapse. Failure to pay on time causes the license to lapse automatically under the FSC rules. No business when suspended. A GBC cannot operate whilst its license is lapsed or suspended without the FSC approval. Reinstatement possible. The FSC may reinstate a lapsed license retroactively, restoring continuity if compliance issues are resolved promptly. Revocation grounds. The FSC may revoke a license to protect Mauritius's international reputation, industry integrity, or the public at large. Fair process. The FSC must issue prior notice, state reasons, and give the GBC the right to respond before revocation. Publication and exit management. Once revoked, the revocation is published and the FSC can direct an orderly closure of business. Overall principle: Section 74 enforces accountability, good standing, and compliance discipline among global business corporations operating in Mauritius. Now, as usual, let's go through a full visual recap of what we just covered in Section 74. Section 74 of the FSA 2007 explains how long a global business license remains valid and what happens if it lapses, gets suspended, or revoked. Annual license fee. Section 74(1). Every global business corporation must pay its annual license fee to the FSC. The amount and deadline are set by the FSC rules, and paying on time keeps your license active. Lapse of license. Section 74(2). If the annual fee isn't paid on time, the license automatically lapses. No extra warning, it is immediate. Restriction during lapse or suspension. Section 74(3). When a license lapses or is suspended, the GBC cannot transact business unless the FSC specifically allows it. Reinstatement of license. Section 74(4). If a GBL lapses, the holder can apply for reinstatement. The FSC may restore it, even retroactively, once fees and conditions are met. Revocation by the FSC, Section 74(5). The FSC may revoke a license to protect Mauritius's good repute, preserve financial integrity, or safeguard the public at large. Revocation is a last resort, used only when necessary. Due process before revocation, Section 74(6). Before revocation, the FSC may suspend the license, give written notice, and allow the GBC to make written representations. This ensures fairness and transparency. After revocation, Section 74(7). Once a license is revoked, the Chief Executive publishes a notice in a government gazette and may issue directions for an orderly closure or dissolution of the GBC. Now, key takeaways: license validity equals annual fee paid. Automatic lapse if late. No business without FSC approval. Reinstatement is possible. Revocation of license equals last resort. Fair procedure before action. And notice in Gazette of Mauritius, known here as the Government Gazette, after revocation. In short, Section 74 enforces financial discipline, compliance, and good governance, ensuring that global business corporations uphold Mauritius's reputation as a trusted international financial center. Section 75 of the FSA 2007 empowers the Financial Services Commission to investigate or inquire into the affairs of a global business corporation, whether there are reasons to suspect wrongdoing, weak governance, or potential threats to the integrity and reputation of Mauritius's financial services sector. In simple terms, this section gives the FSC the authority to ask questions, demand documents, conduct inspections, and issue directions whenever it needs to ensure that a GBC is operating properly and in full compliance with the law. Let's go through a full section breakdown. Subsection 1, obligation to cooperate and provide information. Every GBC must provide the FSC with any information, documents, or records that the Commission requests. This duty applies both when the FSC is carrying out its normal supervisory role and when it is required to share information with other regulatory bodies under cooperation agreements. In essence, GBCs must maintain clear, accessible, and accurate records and be ready to hand them over when requested. Failure to do so can be viewed as non-cooperation or an obstruction. Subsection 2, when an inquiry can be launched. The Chief Executive of the FSC may decide to open an inquiry if there is reasonable cause to believe that a GBC has, is, or likely to breach any laws, guidelines, license conditions, or directions issued by the FSC, has, is, or is likely to engage in conduct that could damage the stability of the financial system, or acted in a way that could harm the reputation of Mauritius as an international financial center. This means that even if there is no violation or that they have not yet occurred, the FSC can intervene preventively if it sees potential risks. The purpose: to allow early detection and correction of issues before they escalate into regulatory or reputational crises. Subsection 3, powers granted during an inquiry. Once an inquiry is underway, the Chief Executive or anyone authorized by the FSC can use several investigative powers, including requiring the production of documents. The FSC can request specific documents or records to be presented for review either at the corporation's registered office or another location with adequate notice. Inspecting and copying. The FSC may inspect records, make copies, or take extracts of any relevant information. Issuing directions. The FSC can give formal instructions to the GBC, such as ordering certain actions to be taken or prohibiting specific conduct. Effectively, the FSC can examine a corporation's operations in detail, on-site or remotely, and ensure corrective measures are put in place if needed. Subsection 4, persons covered by the inquiry. The FSC's power of inquiry is not limited to the corporation itself. It can extend to current or former GBCs that previously held a license, present or past directors, officers, controllers, and key decision makers. The meaning: The FSC can look into the actions of individuals who played a role in management or control of the GBC, even after they have resigned or the corporation has ceased operations. This ensures accountability and prevents people from evading scrutiny by stepping down. Subsection 5. Reporting after the inquiry. After completing an inquiry, the chief executive must prepare a written report to the FSC board. This report sets out the findings and conclusions, observations about the GBC's conduct and compliance, and recommendations for any further regulatory or enforcement actions. This process ensures transparency and accountability within the FSC itself. Every inquiry leads to an official record and documented outcome. Subsection 6. Offenses and penalties. If a person or anyone fails to provide information or documents requested by the FSC, or tries to obstruct or interfere with the FSC's work during an inquiry, they commit an offense and can be fined up to 1 million Mauritian rupees upon conviction. Cooperation with the regulator is not optional. Refusal or obstruction has serious financial and reputational consequences. Now, the key takeaways from Section 75, both from a key aspect and what it means to the GBCs. Full cooperation is mandatory. GBCs must provide all requested documents and information to the FSC. Inquiries can be preventive. The FSC can act before harm occurs if it suspects a potential breach or reputational risk. Strong investigative powers. The FSC can inspect, copy, and issue binding directions during inquiries. Covers current and former officers. Accountability follows individuals even after resignation. Formal reporting. Every inquiry leads to a written report to the board of the FSC with recommendations and heavy penalties for non-compliance. Obstructing or refusing to cooperate can result in fines up to 1 million Mauritian rupees. Through Section 75, the FSC holds the authority to protect the integrity of the financial system in Mauritius. Every global business corporation and GBL license holder must operate transparently, cooperate fully, and uphold the highest standards of compliance, because in a world of global finance, trust once lost is not easily regained. Now, once again, as we always do and have throughout this video, let's go through a full visual recap. Section 75 empowers the FSC to inquire into the affairs of a GBC. Obligation to cooperate. Subsection 1. GBCs must provide all information and documents requested by the FSC whenever required. When the FSC can launch an inquiry. Subsection 2. The chief executive can open an inquiry if there's reason to believe that a GBC has broken laws or license conditions, acted improperly or posed reputational risk, threatened the integrity of the financial system in Mauritius. Now, a key observation, it's not just has, is has, may, or is likely to. Powers during inquiry. Subsection 3. The FSC can request and inspect documents, visit officers and review operations, copy or extract key records, issue directions to correct or stop actions. Persons covered. Subsection 4. The inquiry may cover current or former GBCs, past and present directors, officers, controllers, or key personnel. Reporting. Subsection 5. After every inquiry, the chief executive prepares a written report to the board of the FSC, including findings, comments, and recommendations. Offenses and penalties. Subsection 6. Failing to cooperate or obstructing an inquiry is an offense. The penalty upon conviction, 1 million Mauritian rupees. Once again, the key takeaways: full cooperation with the FSC is mandatory. Inquiries can be preventive, not only reactive. Strong investigative powers ensure transparency. Accountability applies to both current and former officers as well as license holders. Non-compliance leads to serious penalties. Section 75 reinforces Mauritius's reputation as a trusted, transparent, and well-regulated international global financial center. Before we move into Section 79, it's important to clarify that Section 77, which deals with management licenses for management companies, has already been covered in a previous video. Section 78 relating to nominee companies will also be skipped for the same reason. The remaining provisions under Part 10 of the FSA 2007 primarily apply to other categories of financial licenses and are therefore not relevant to global business corporations under this particular video, but will be covered individually in the future. Now, Section 79, Special Provisions for GBCs. Section 79 provides special treatment and distinct regulatory treatment for global business corporations and authorized companies operating in Mauritius. It ensures that their governance and compliance frameworks are properly aligned with their international nature. Subsection 1, exclusion from certain parts of the Act. Under Subsection 1, Parts 8, Powers of the Commission, and 9, Enforcement Committee, Settlement Committee, and Financial Services Review Panel of the FSA 2007 do not apply to corporations holding a global business license or those authorized companies unless a GBC holder of a GBL gets or holds an other form of financial services license or registration under a relevant act as covered in previous videos. In simpler terms, non-financial GBCs are exempt from certain administrative and structural provisions that apply to domestic licensees unless they are engaging in other regulated financial activities like investment dealing, insurance, or fund management. The purpose for this maintains regulatory proportionality. GBCs primarily conduct cross-border activities and are therefore regulated differently from purely domestic financial entities. Subsection 2, FSC's discretion through rules. Subsection 2 gives the Financial Services Commission the power to create specific rules, known here as FSC rules, that can define exceptions, limitations, or restrictions to certain regulatory requirements and apply those exceptions or modifications to applicants or holders of global business license or classes of them, and applicants or holders of authorized company authorizations. In practical terms, this allows the FSC to tailor regulatory requirements based on the nature, scale, and complexity of the business, ensuring flexibility and competitiveness within the international financial services framework. Key takeaways here with no actual visual recap. Exemption rule, parts 8 and 9 of the FSA 2007 do not apply to GBCs. Unless they hold other financial licenses, FSC flexibility. The FSC can create or adjust rules, allowing exemptions, restrictions, or tailored compliance requirements. Regulatory balance. This ensures GBCs remain internationally competitive while meeting governance standards. And the strategic purpose? Section 79 strengthens Mauritius's position as a transparent, compliant, yet business-friendly IFC. Now, before we wrap up, it's important to include a clear disclaimer. This video is for informational purposes only and does not constitute legal or binding advice. The information shared here may not always be fully accurate, complete, or up to date. You should always seek your own independent legal or professional advice to address your specific circumstances. While this video may outline general legal and regulatory principles, it may not apply to your individual situation. Laws and regulations vary between jurisdictions and are subject to change. Always consult a qualified legal representative or your chosen management company for tailored advice. The creator of this video, meaning myself, Jonathan Venkatachelam, will not be held liable for any direct, indirect, incidental, consequential, or special damages connected to the use of the information presented, including reliance on its content, errors, omissions, or actions taken based on the video. The creator of this video, again meaning myself, Jonathan Venkatachelam, is not associated or connected in any way, shape, or form with any governmental or regulatory body in Mauritius or abroad, at the time of recording this video. And finally, all material and content referenced have been obtained from publicly available sources. The views, opinions, statements, and recommendations expressed here are entirely and purely my own, based on my professional experience, having and still working in the global business sector in Mauritius, and do not reflect those of any regulator, authority, or past, current, or future employer. This YouTube channel is my personal project and my own, and it is not connected to nor part of any organization. As we reach the end of this deep dive into the Global Business Corporation framework under the Financial Services Act 2007, let's take a moment to bring everything together. The Global Business Corporation, or GBC, as we saw, represents one of the cornerstones of Mauritius's international financial sector. It provides the structure through which global investors and corporations can operate across borders while benefiting from the country's strong regulatory standards, treaty network, and reputation for compliance. Understanding the GBC framework is not just a matter of legal knowledge, it's essential for anyone involved in global structuring, fund management, or cross-border investment. Every section we've covered, from the definition of a GBC to licensing under sections 71 and 72, to the powers of the FSC and the special provisions under section 79, plays a critical role in ensuring transparency, sound governance, and integrity. So let's recap the core framework of today's video. Number 1, definition and legal foundation. Section 2, a GBC is a corporation holding a global business license, granting it legal status to conduct business primarily outside of Mauritius with foreign beneficial ownership. Licensing and application. Section 71 and 72. The FSC issues global business licenses after assessing the corporation's substance, beneficial ownership, and fitness to operate as a GBC through non-Mauritian-based business activities. Number 3, conduct of business. Section 73. GBCs are permitted to carry out certain dealings in Mauritius, such as maintaining local bank accounts, hiring staff, or investing in listed securities domestically without losing their global business status. Number 4, FSC oversight and directions. Section 73A. The FSC has the authority to issue binding directions to protect Mauritius's reputation and ensure proper conduct within the financial services sector. Number 5, license validity, suspension, and revocation. Section 74. The global business license must be renewed annually and may be suspended or revoked for non-compliance or conduct harmful to the jurisdiction's integrity. Number 6, FSC power of inquiry. Section 75. The FSC can conduct inquiries, request documents, and issue directions whenever there is a reasonable cause to suspect breaches, improper conduct, or threats to financial stability. Number 7, special provisions. Section 79. GBCs benefit from tailored regulatory treatment, flexibility in compliance, and recognition as tax resident entities, ensuring Mauritius remains competitive yet compliant on the global stage. If you found this breakdown and video helpful and want to stay informed on Mauritius's financial, legal, and compliance framework, like this video, share it, and subscribe to the Global Business channel for more in-depth insights into global structuring and regulatory compliance. Thank you, take care, stay safe and healthy, and we'll catch you in the next one. Cheerios.